Now we talked about the Nasdaq here on what was it, Sunday. Okay, so we talked about this sort of level, this horizontal level that price action has come back down to. Now the problem is that we didn't know how far this is going to go down, and that's the problem with this area. So we had this sort of doji bar there, then we had this inside bar, and it was one of these things that we don't even know whether this is the place that it's going to bounce or not. But again, we can see it's come back into this area. And yesterday we had a bullish day. And today we've more buyers in the market, but they're a little bit unsure. They're waiting for the pre-market, they're waiting for the pre-market to see what's happening here, whether it's going to be a buying day, whether it's going to be a selling day at the moment. So we're in a transition here at the moment. Now we took this short, okay, off this double top. We put our entry here and we put our take profit just above. Okay, so at this present moment, we're down slightly. Now, would this have been a trade that I would have taken? Nope, absolutely not. But we talked about it. We talked about both. We talked about buying this and we talked about selling this. Okay, when we were talking about it on Sunday, we said that this one, we could sell this one, but if one of the other ones come back down to the level, we could actually buy them and then we have a hedge. So we've a hedge. So for anyone who doesn't know what a hedge is where you're buying two assets that are going in the opposite directions, or buying two assets that follow the same structure, only you're buying one and you're selling the other. So the idea is that you lose one and then you win the other. And the one that wins continues to run. The one that loses, it's cut quite early. Okay. And that would be the idea behind it. So we looking at a short here. Now, why we put it here, because it was a small little level here at the 1600 level. But looking at the structure here, do we think this will come down, or do we think the market will continue to go up at this moment in time? So when we took this trade, we were talking about it here. We're looking at a sell here, entry below it, stop loss up here. We got triggered in, went down to about 0.5% up, and now we're 0.2% down. So are we at this moment, are we looking for this as a sell, or do you expect this to go up? Eduardo, we're not looking at the S&P or the Dow yet. We're just looking based solely on what we see here ahead of us. Well done. Trade with the trends till the bend at the end. Okay. So theoretically, I'd be looking at this as more of a long than a sell, but there was a short at that particular time, and we allowed an extra little bit on our stop loss just in case for this to turn around. Okay, but for me, I'll be more looking for that as a long. But the problem is it broke this level, it broke this area, so I couldn't have taken that as a long. So let's hopefully, when we look at the other two, they come down to that level, the levels for us. So if we look at the S&P, so the S&P didn't come down to that floor, did it? We wanted it to come down to there, didn't we? It never come back down. Even though we have this sort of low test bar here, we had this inside bar. Some people argue, well, Henry, your level is a little bit low. Your level could be there. Absolutely could be. So you have one touch there and then two. But the problem is I want proper confirmation. So I wanted to come back into that level. I wanted to come back and hit those two and then come back. So that's a double top. It's come back, then test it and look to take off. So did anyone take that as a long there? So anyone take that on that bar there as a long. Anyone look to take that? That means then if you took a short on the likes of the Nasdaq, we're slightly down. If you took a long on the S&P, we're probably, yeah, we're slightly up, which means you'd be net zero overall over the two trades. So the idea with hedging is that you have a big enough stop loss that you're not going to be triggered out on your bigger, or you're not your long-term position. So the long-term position here would be that this is going up. So what we would have done on the Nasdaq is taken a short-term short on this. And when we feel that it's hit a level or it's hit an area where we wanted to jump out, we would jump out on it. And vice versa. We take a long position on this here. But if the market drops, we want to make sure that when we get stopped out of the other one, that we still have room to go and make profit out of the two trades. Hedge. But yes, the S&P made a record. Okay, so you're short and the S&P didn't trigger. But why did you go short on the S&P? Because there's a much stronger level here in the S&P. Well, I say stronger, there's a much cleaner level here in the S&P than on the Nasdaq. And the Nasdaq was going down where the S&P was going up. And let's have a little look at the Dow. So your buy in the S&P didn't trigger. Okay, well, it looks like it should. Sorry, S&P. Oh, it needed to come back down to this area. Oh, you put a limit order on it, Shane? Did you? A limit order around here somewhere? No, it didn't come back. Let's have a look at the Dow. And again, we wanted the Dow to come down a little bit further as well. But again, we're not going to give out that the market is going up. We're not going to, what would you call it? Be annoyed that the market is going up, because that's exactly what we want. We're wanting it to come down to that level there. And it didn't. It didn't quite come back down. Did anyone take a long on the Dow? Anyone take a long position on this? Because yes, I did. What was your reasoning for getting in? And did you have your entry there and your stop loss there? The turn of the market, but how do you know that's the turn of the market? There's no, for me, there's no floor there. There's no bottom. It's not sitting on anything. It's not hit anything to say that this is turning. There's no horizontal, there's no trend line here to say that that's the area it's going to bounce. So it's profitable at the minute. Well done, and hope it continues. Anyone who took this trade down here, look, even though we put a huge stop loss on it, even though there's a huge stop loss on it, look, we're now getting close to taking profit, aren't we? We're getting close to taking profit. You're 1.5% up on this one. Okay, so you bought another one. Okay, cool. Well, as long as your stop loss is out of the way, that you're not getting triggered in, and triggered out very, very quickly. But the idea of this trade here, now, anyone who has this one originally still open, because some of you guys will have that open still, okay? Are you looking to jump out of the market when it hits this up here, when it hits the 3 to 1? Are you looking to jump out of the market at that point? Or is this something that you're looking to leave running long term? What would your thoughts on this be? Leave this running long term? Or, okay, so someone says put in a trailing stop loss. But again, how far behind are you putting a trailing stop loss? Are you putting it 1% behind, 2% behind, 3%? What's the, so 1% behind? So it depends on where you put it. Because remember, if you put your trailing stop there, so bring that down a fraction. So you to put your trailing stop there at that high. So look, you would have been stopped out here. So you would have took the profit from here to here, which was probably 0.7%. Okay. If you didn't move it yet, so if you're only going to move it now, okay, you're here. So the market has to drop lower than this little level for your stop loss right now. So there's where your stop loss would be. Okay, so we're moving it 1% behind. So you have to work out, is your stop loss behind these floors? Now, the question, I suppose, with this, and the reason why I'm asking is, what's the probability of the market coming the whole way back down to this level or even hitting this floor here? What's the probability of the market dropping down and hitting that floor? So someone said move your stop loss to break even. So you're saying move your stop loss to there. But what's the probability of the market hitting that floor, coming the whole way down? If I get my ruler, that would be, well, that wasn't the ruler. That would be a 9% drop. So the probability of that happening at the present moment is unlikely. Why? Because we have an overall trend going up here. So it's unlikely that we're going to have a drop the whole way down to there. Now, someone said move your stop loss to break even. So this would be the line where we're moving our stop loss to. So then what's the probability of it hitting? That's a 5% drop. What's the probability of it hitting that level? It's a little bit higher, isn't it? A little bit higher. So it means every time you move your stop loss, you're bringing the probability of it hitting your stop loss higher, aren't you? And then someone said a 1% behind, and I think it was somewhere around here, the 1% behind. So about there, where our stop loss was there. So it means any sort of dip in the market, and you're out of it here. Now, at this particular point, you would have probably banked in maybe 1 and 1.1%, 1.2% profit on this particular trade. And for anyone that's new and anyone who we're talking to here, I only ever risk 1% of my account. So from the stop loss to my entry, I risk in 1% of my account. So the distance here, every time that moves up, that's 1%. Okay, so that's the idea, and that's the idea behind it. So what we're looking at here is how to manage this trade if we're running with it. Now, there's loads of different ways to managing this trade. If it hits here, take full profit. Take full profit of your trade. You can, if it hits here, close your trade. If you close your trade, just say you're risking 100 quid, that's a 3-to-1, and that's 300 quid banked. So that means 150 of that 300 quid is banked in your account. So first part is closing the trade fully. That's the first one. You've banked £300. Second one is part closing the trade, which means then you're popping 150 quid into your account. Now, with that decision, then there's a couple of scenarios. If the trade goes the whole way down and stops you out, you lose 50 quid here, but you've banked 150. So overall, you've made £100. Yes, you've lost out on 150 quid here, the profit that you had. That's the theoretical profit you had here. The 50 quid that you have trading. So overall, you've banked in 100 quid out of this trade. Second thing is you move your stop loss inside break even. So you move it inside break even. Which means then that if this market drops down like this, you then have banked in 150 quid here previously. Your entry's above zero. So you're banking in maybe 1 quid, maybe 2 quid. What I suggest is when you're trading CFDs, and this is a CFD, the CFD will cost you a little bit of money. So my thinking on all sort of this is that just say the CFDs cost you 5 quid, move your stop loss to say 10 quid in profit. So then it covers all your fees, it covers all that. So which means then the 150 quid that you've banked, that's called gearing chain. That's a completely different scenario. Okay, that's a completely different scenario. Because this is at a record high, how do we know at this 3% it's going to start dropping? There's absolutely no way of us knowing that that's going to drop. Now at this particular point, we had a double top. You could have shorted that there. But now at this present moment, we have nothing to indicate to us that this is dropping. Nothing is because we're looking at this as bullish. The futures market is bullish. So there's nothing to tell us there that this is shorting. Okay, we have to have a short setup. We have to have a couple of high test bars. We have to have a double top. We have to have something like that to give us an indication that this is going to drop. So you could short it, but again, you don't necessarily know when that's going to happen. So you close trade and move your stop loss inside break even, which means if this drops down, it means you've lost no money. You've lost no money in this trade. You've lost the paper money that you had here, the 150 quid paper money that you had. That's now dissipated. Absolutely, you could. And that's where these levels come into play. That's where these levels come into play. And then if you wanted to short it, it would have to come back and retest these highs, and then we could short it. Okay, we expect the market to continue dropping. So there's loads of different ways of managing your trades. There's loads of different ways. Now, what I suggest to everyone who's online, I suggest anyone who is doing that, go and look at the spreadsheet. I have a spreadsheet in the chat room, how to manage your trades. Look at the 1-to-1s, 2-to-1s, 3-to-1s, and then a trailing stop loss. And then if you want to add in other trade management styles, just add another column to the page and actually do that. But remember, you also have to use the same type of trading. Okay, so this here is called trend trading. So we're going with the trend. Okay, so we're going with the trend. Now, if we're shorting the market, that's called reversals. So we need to open up another page and put a heading on that as reversals, because reversal trades will have a completely different strategy. They'll have a completely different risk to reward. Everything will be completely different to the trend following. Okay, so you can't put reversals and trend following into the same spreadsheet. It will skew the numbers. Now, if you use pivot points, you can't use pivot points in the same spreadsheet as trending markets or reversals, because they're a completely different way of trading. So journaling is absolutely key when we're looking to trade. And why is journaling so important? Why is journaling so important when we're trading? And I don't mean journaling from backtesting. Journaling from backtesting is absolutely crap. I've done backtesting. It's the market is always moving forward. You will never 100% stick to a set of rules, a set of structures. So why journaling is so important is that because they are your trades. They're your trades. It's what you have done with the market, okay? And what we're doing is we have one column, what you have done. The next column is keeping a track of the risk reward. If I had stuck to a 1-to-1 risk reward, if I had just stuck to a 2-to-1, 3-to-1, trailing my stops, you can compare the trades that you have taken. Now, not forward testing, not the ones Henry's taken or Ben or anyone else, or Tyson or Kathy or Shane or anyone's trades. You're looking at your trades. So you have a column for what your results are. And then the other 4 columns are comparing your results to if you're robotically not going near the market, place your trade and walk away from your laptop. And that's why it is so important. Then you can work out that the 1-to-1 trades, they work best for you. 2-to-1 trades work best for you. Or the 3-to-1 trades work best for you. Or the actual trailing or stop loss is far better. So that's the idea. So how many people here actually do a trade journal? How many here actually use a journal? Trying hard. So Sam said yes after your boot camp. But Sam, when was the last time that was updated? When was the last time that was updated? Last week. Well done. Good. It should be updated at least once a week. Updated once a week. And you'd be surprised at the numbers at the end of the 50 trades. Now I say 50 trades. And then you have some actually data on how your trading is going. And that's the beauty of this, because it's not my trading, it's not anyone else's, this is literally your trading. So you can tweak, you using a spreadsheet, you can then tweak and edit your trades. Okay. Let's have a quick look at the European indices, see how Europe is going. So we're looking at the German DAX, and it's absolutely flying at the minute. So if the European market is not to go by, we would also expect the the US market to continue going. Now, how many people took this trade here Sunday? Was setting up there, lovely, came back, entry, stop loss. It is at the moment 2% up. We risked 0.87. How many people took that? Mine didn't trigger. I'm assuming your entry wasn't then at the 7422. I assume when your entry wasn't above that bar. I assume when you had a limit order down here somewhere. So we're 1.5, about 1.5 to 1 are doing it. 7385. Why are you getting in there? Why didn't you put your entry above the bar? At the minute, we're about what's that? 1.2% up at the moment. So anyone that took that, well done. Nice little trade. Pull back nicely, come back to that double bottom or double top, and then retest it. Really nice trade. Now, again, the problem is with the likes of this is that this is not massively trending. Look how flat this is. So where should our target be on this one be? Should our target be 3%? Should it be 1%? Should we just take profit now on this particular trade? How should we manage this trade? Because we can see here that this market is pretty flat. We've now seen it as broken out to the upside. So how do we manage this trade? So you guys have as much information as me right now. How would we manage this one? Let it run. If there's a small pullback, sell. Now, when you mean sell, do you mean take profit, jump out of the trade? Yes. Okay. Look at the cycles. Gary, what do you mean by look at the length of the cycles? The touches. So you can go there, and because there's a big old wick on it, you can go there. That doesn't really help us, does it? So the idea would be is to have a look out and see if there's any other data out here. And we can see there is loads of little levels along here, isn't there? There's loads of little levels out here. We're not, this is not like the Nasdaq, this is not like the SP. We're not at record highs. So we're looking for areas that this might turn around. So this green line is where we are, this dotted green line, so that's where we are. And there's actually a level there, more or less on the bottom of that green line there. So 1, 2 touches, 3 there, 4, 5. So we are at that ceiling there. And let's see how this plays out. Okay, use RSI on multiple time frames to check for potential take profits. So do you mean using the RSI as overbought and oversold? So if you have all the time frames and it's overbought, then you take profit. Is it time to short it if it's at that level? Okay, so I've raised a couple of issues here. I've raised a couple of issues by simply doing this. And unfortunately, there is no 100% right or wrong way of doing this. Unfortunately, there's not. What is the perfect way to trade this? There is none. There is none. But before placing this trade, you have an ideal setup. You have a structure in your head. You know what's sort of going on. Now, so before we place this trade, if you had a 3-to-1 target, we left it as a 3-to-1 target. Before you place this trade, you looked out and said, well, there seems to be a level here, bounce once, bounce twice, 3 times, 4, 5. So this level, this top one here, that seems to be the area. Then we put our take profit just inside that level. So that's where our take profit goes. So it comes down to what was your analysis when you took this trade? Stick to what you were thinking. Stick to what was going on. If your analysis was that it should hit this head and then come back down, you stick to that. So to answer your question, Shane, is there a potential short at that level? No, I wouldn't be looking. For me, this one here looks like a much better level. This one here. Even though it's been broken, there's 2 really good rejections on this, 3 really good rejections on this. So for me, that's a much better level. But again, time will tell. So there's no hard and fast, there's no exact certain way with it. But when you're filling out a spreadsheet, make sure you're putting in the asset class, so the UK100 in here. And then what we can do is then over a little bit of time, once you start, never delete the data out of the spreadsheet, never delete it, which means then that you're collating, and all of a sudden then you can actually pull up all your UK100 trades. You can go back and look at your trading on a spreadsheet. Forget about how the market's running, forget about all that. You can have a look at the spreadsheet and go, well, actually 2-to-1s from my trading history, 2-to-1s look the best scenario on the UK100. And then what we do is we set our take profit as a 2-to-1, and then we go and have a look, is there any support and resistance in the way for hitting a 2-to-1? So we're looking at it systematically rather than going, what someone said is, once it starts selling off, take profit. Or once someone else said, start looking at the RSIs and all the smaller time frames. Okay, that absolutely do not, because you will never ever repeat this over and over again. What we want to be able to do is a trading strategy that you can repeat. Nobody wants to be here trading 24 hours a day, 7 days a week. We want to have this passive. We want to have this that we're able to make money with a place to trade, then walk away from it. If you go on holiday for the next 10 days or 3 months, that your trading is not affected. And that's the idea behind it. So for me, let it run. And that's that ceiling there. So we have our take profit just slightly inside of that. So which would be a 2.3% return on investment. Okay. 2.7 is your 3-to-1, and this is 2.1. Okay. So about 2.3-to-1 on this one. And that's how I would manage it. Now, there's no guarantee that that's the best way to trade it or use it or manage it. So this is why you're doing doing a spreadsheet, doing a trade journal is so important, massively important. So is there anything you guys want me to look at? Okay, so rather than randomly going on to crypto, I'm doing that for you guys. Is there anything you want me to have a look at? So if you put it in the chat group there, I'll go through, I'll have a look at it, and I will go through them for you. ZM. Zoom Communications. So Zoom is a funny one because we have a little floor on Zoom. So it's double bottomed, a double top there, broke out. And now it's at 1, 2, 3 touches on this floor. So I still have Zoom. I still have Zoom open. Now, the reason I have Zoom open was because of this. Its revenue was up. Okay, its earnings was up 2% higher than expected. Now, was it good enough for the market to turn? No. But for me, it was good enough to sort of hold on to this. It was good enough for me to be sort of holding on to this. And I'll be very interested. I'll be making a decision in the 1st of March whether I should hold this trade or not, depending on what's going on with the next earnings report. That's the big one for me, is the next earnings report. But remember, in between, what do we have? We have a historic sell-off on the market. We have a historic sell-off in the market. So with that in mind, with the overall trend coming down, with a potential historic sell-off in around the 15th of January till the mid-February, is this a good place to buy Zoom at the moment? No. So Sam said he is shorting it at the moment. Good, absolutely. I don't see any reason why you couldn't be shorting this. The overall momentum is down. So for me, that either has to pull back to there and short it, or it has to break and retest, and then there's a short on it. So they're the two scenarios there on that, if you're shorting it. Well done. Keep up the good work. China. Perfect. China. So China has come back to this sort of trend line. We had a buying day, and then we had 2 or 3 indecision days since. Okay, so we've had 2 or 3 indecision days since. Now, can we 100% at the present moment trust the bars that are going on at the moment? No, because up to today, the markets have been off for Christmas, they've been on holiday, so on and so forth. So liquidity is not where it wants to be. Okay. But again, there's still been opportunity in the market. So for me, We're looking for that to come down to the horizontal level. I expected to break this trend line. I fully expected to break this trend line and then have some sort of rejection on this. But if it breaks this, it's then coming down to here. But again, it's one of these ones that it's slowly turning, it's slowly heading to the upside. So it's a matter of when it's going to happen. Is it going to happen here, or is it going to come back down to this level? Now, ideally, if it comes back down to this level and we don't have huge bad news or huge amount of negativity coming out in the market, I will be looking to take that long at that particular point. But again, we will see how this plays out. It may never get back to here. It may bounce here and then take off to the upside. But this one is one of these ones that is nice and slow. It's holding on to this. This is not a quick trade. This is slow and steady. Ideal scenario will be come back to this purple line here. But we have to sort of sit tight and see what happens. PayPal. PayPal is one of these that looks like it's slowly starting to turn. People are not 100% confident in it yet. Look, it's slowly starting to turn. It's not 100% comfortable yet. And again, remember, earnings is coming out in the end of February. Okay. So if you're expecting the next earnings to be pretty decent on this looks like a potential really good buy. If you're expecting the earnings to be tough and it's not to be where they were, then we could see a substantial drop again on the likes of this. Now, if we look at the last earnings, they were up 3%. Okay. We're up 3%. This was negative, all right, yes. Revenue was negative, but the standardized earnings report was up 3%. The earnings per share was up 3%. So if they can sort this number out, if they can get this into the green, we would expect a pretty big jump on the likes of this. Because looking at the likes of this now, people are looking at this and there's a 30% return on investment for this to get to the high. So we're at $200 now. If we look, the high was 300. So that's a 33% return on investment if that gets back to there. So we are in this little bit of limbo. We're in this little bit of no man's land here. Do I expect this to recover? Yes, absolutely 100%. I expect this company to recover. But it's whether it'll be this earnings report or whether it'll be the next one, I'm not entirely sure yet. Anyone want me to check anything else? I just see TY. I was going, oh, what's TY? Oh, thank you. So that's what we're looking at here. We're looking at this. The lows are getting higher, but again, it's traders at the minute are a little bit unsure with it. TEF. I'm assuming we're looking at the New York Stock Exchange one. You look at this for dividends. Is it getting close to the ex-dividend date or anything like that? Is that why we're looking at it? But it looks like the dividend has already come out. Hence why we had that drop. So, have you all seen that? So we have the dividends coming out on that date, and we have a sell-off. Well, we actually had a gap down and then we had a sell-off. So just to cover that is when a stock pays a dividend. So just say we have, so I'm just gonna go through that there. So just say we have a dividend. So stock is dropping down, it's dropping down. Okay, and it's dropping down. So today we have dividend. So today is the day that the dividend is going to come out. And I'm going to pay, so we're all on Henry Ward stocks, and I'm going to pay a 1% dividend. Now, we know that the market closed here. So there was a close and there was the open. So the market has closed there. So where do you think the next open is going to happen? If everything was all good in the market, where do you think the next open of the market would be? Where should the next open of the market be? What do we think? Where do we think this opening should be for this market at this particular point? Come on, guys and girls, get off the fence. Okay, down, but where? How much? More down. We're getting very specific right here, right now, aren't we? Come on, anyone hazard a guess? The answer is actually on the page. 1% what? So everyone has put 1%. 1% what? 1% up, 1% down. Well done, Gary. Gary was the first to come across it. So normally what would happen is the market would open right there. And then the bar would form and just say the normal trend would come down like that. So that's what would happen. But when we are talking about a dividend, and it's a 1% dividend, the market will open down 1%. Why? Because that's a dividend that's being paid out to all the shareholders, which means that the market will drop 1%. And then if the overall momentum of the market is still going down, it will continue going down. So when a dividend comes out, it will gap 1% or down 1%. Okay. So if we had the market going up, so where do we expect the market to open now? Okay, so there's the top of it, there's the close right there is where it closed. Where do we expect that market to open? So we would expect this to open 1% down here. And if the market is bullish, we then expect the market to continue going up. And that's why sometimes we don't actually see it. That's why we don't actually see it sometimes when the dividend comes out and then continues. So just a little thing for you guys. And if you're shorting the market, and you're using leverage X5. So just say you're shorting the market, you're using leverage X5. So which means then the market gaps down. So which means then that you're getting 5 times that movement down. But remember, the dividend is for people who are actually holding on to the stock. So what will happen is that out of your balance, the actual dividends will come out X5. So theoretically, you're at the same point. So the market has dropped down 5%. So just say you've made 50 quid by that. But what will happen is that the dividend is for people who are going long and holding on to the stock, which means then the 5%, that 50 quid will be taken out of your balance. And so it will be overall the same. Okay, so one will be taken out, the other one will be given. So which means that your balance will stay the same, but money will be taken out for the actual dividend. So that's if you're shorting the market. So you'll still be net zero over that whole movement, but just to make you aware of that. Okay, guys, so this has been a little more of an educational sort of webinar than going into massive amounts of detail of what we're going on. So I am running a boot camp on the 18th of January. Okay, so I'm running a boot camp on the 18th of January, and this is what I'll be going through on the boot camp: advanced market structure, intraday trading, how to catch market swings, advanced trading management, journaling and tracking trades, the best dividend stocks, PE ratio, and how to dollar cost average. So that is something that I'll be running on the 18th of January. So this is an 8-week boot camp, and it is your chance to personally train with me in a small group, teaching you all the advanced concepts that I use in my trading. So the idea of this is to keep the group nice and small, and we have 2 types of groups. Now we have an intermediate and we have an advanced group. Okay, so if you haven't done my free course, you will not be taken in on this group on the 18th. Now, anyone who has done my bootcamp already, you have access to my bootcamp for life. So it means then whenever you jump, the bootcamps have been ran, you can jump in on them live again. So the 18th of January, which is a Tuesday, they're on at 8 p.m. UK time. Now, anyone who is interested on the likes of the bootcamp, you need to go to my website and you need to log in. So you have to have a login, and then you need to go to the 8-week bootcamp page. Okay. And when you click on the bootcamp page, click on apply, and then tell me why you want to do this. Tell me what level you're at. I'm going to do as much detail as you can about your trading at the moment. Okay. So go through that again. If you want to jump in the bootcamp, go to my website. I'm Harry. Go to the training section, click on 8-week bootcamp. It will bring you here, and then click on apply now. Now, why we have to apply for this is because this is it's not a first come, first serve basis. And tell me whether you're an intermediate or whether you're an advanced trader. So if we have more advanced people doing it, I will jump in and do an advanced bootcamp. If we have more intermediate people doing it, I will do an intermediate bootcamp. Okay, so it depends on what's the largest group I have coming in, and so that's why it's an application only. So anyone who wants to jump in on that, let me know. Jump onto my website, log in as a free member or a paid member. Is completely up to yourself. Doesn't matter really, whichever one you want to do. And I'll go into more detail of what we're actually doing here, give you a set structure. I will give you homework. I'll give you things to do, and then go from there. So the closing date for applications is the 14th of January. So I will let you know by the 14th of January what sort of bootcamp I'm doing. And then we'll jump in and we'll start on the 8th of January. Anyone got any questions? Anyone's got any questions? Pop them into the chat group and let me know. Doesn't look like there's many questions coming in. Okay, cool. So that's everything, sir, you need to know about it. If you want to jump in on it, make sure and let me know on the application form. Look, everyone, it's been an absolute pleasure. Anyone who is listening on YouTube, thank you very much for listening to me for the last hour. Hope you have a lovely day, and I will speak to you all next Tuesday. Thanks very much, everyone. Bye-bye.